I mean, look, you I know thought that we wouldn't know the outcome of the election for many weeks. I think that was your base case coming in. So I think there's a lot of surprise, rethink, as we look at where this market might be able to go. On that note, you do have a new ETF, which I want to talk about. It's called the FundStrat Granny Shots U.S. Large Cap ETF. Granny Shots being that you think these would be a little bit easier to make, right?
Yes, that's right.
How'd you build it? We're talking about names. I hope we show this. I think we have produced this up. Tesla, Goldman, JPM, Johnson Controls, Caterpillar, Emerson, TransDigm, Eaton, Oracle, Ingersoll. That's the top 10. But how'd you build that? Gosh, I was just going to ask you about the VIX. It's funny you went there. I'm staring right at it. I mean, it's down 30% on the week. At just a full-blown collapse, right? Don't forget, we were above 20. I think we were at 22 at one point last week. We're barely above 15.
Yeah, it was actually very interesting to look at the VIX futures curve. But on election day, the VIX futures curve was over 20 all the way through August of next year. It should be around 15, 16. The markets were pricing in tumult and uncertainty for like 9 months, 10 months. So I think there's a huge amount of re-risking taking place. I don't think people got their exposure yesterday and today.
Tom Lee highlights the sharp decline in the VIX, signaling reduced market uncertainty following smoother than expected election outcomes. This shift has spurred investor risk-taking and optimism about market growth. He introduces FundStrat's Granny Shots ETF, which focuses on stocks tied to long-term themes like AI and Fed policy. Tesla, a key holding, is highlighted for its undervalued potential in AI and intellectual property beyond its role as a carmaker. Lee also discusses the opportunity in small-cap stocks, which are undervalued and poised for recovery. He remains optimistic about market prospects, citing easing monetary policy, strong earnings, and pro-business fiscal measures as key drivers.
Where are we on fundamentals and just, in terms of this recent rally, in terms of multiples and your expectations on earnings as we head into next year?
Earnings season, I think actually, as we're wrapping up, is still been very solid. As you know, the drag on earnings has been energy and some of the commodity groups as well as healthcare. But, groups like industrials and tech are still producing good numbers. I think next year the outlook should be good because cost of money is coming down and we're seeing housing activity pick up. And if there's mergers, this is actually much better for small caps, and small cap earnings growth has been around 40%. So I think it still sort of guides us to the same trades, which is we want to be more cyclical over the next 6 months and then also look at things like small caps and Bitcoin.
Small caps, why? Mergers, just give me a little bit more on why small caps are going to be a bigger beneficiary.
Well, part of it is the backdrop. Small caps have underperformed for the last 5 years by really the largest margin in 25 years. They're now trading at 10 times median PE relative, and for the S&P that's almost 18 times, so a 7 PE discount. Small cap earnings growth is faster, and not only that, but roughly 44% of it is what I'd call very cyclical, and that's things like regional banks and industrials. That's a bigger weight than in the S&P. And then finally, there's a lot of cash on the sidelines, and I think if people are looking for breadth expansion, that's small caps.
Well, they also don't have the trade exposure. They get the benefit from lower taxes and regulation.
Yeah, that's a good point.
Without the tariffs also, so it feels like they're in the sweet spot.
That's right, and the margin of outperformance could be sizable. I mean, they've underperformed by almost 100 percentage points, so I think you could recover that over the next few years.
We were mentioning Elon Musk a moment ago, and over the weekend, he endorsed this notion from Senator Lee about end the Fed, essentially. Journal over the weekend with the piece about Powell preparing or being ready to defend a removal if, in fact, he's asked to leave. Do you think the bond market would revolt at any kind of attempts to influence the Fed or re-executivize the Fed?
Yeah, absolutely. The Fed is the most powerful entity in the world, and part of it is its independence, and it's something that even the bond market is scared of. I think changing the structure of the central bank would be not good for capital markets.
Wondering whether things were getting overdone when the Journal says a melt-up could be in the cards. And the Trump trade has already been going for a while. You think it's just getting started at this point? There's a lot probably for the markets to like, I guess, in terms of, he likes easy money, he likes low regulation, he likes lower taxes. I mean, there's a lot. It's more than a 2-week rally, maybe, in your view.
That's right. And I think maybe markets are course correcting because now with DOGE, the Department of Government Efficiency, there may be cuts to healthcare and industrials because of defense spending. So things that investors can focus on more deregulation of animal spirits, more like small caps and financials.
All right.
What about healthcare? You mentioned that in particular. I mean, it's not just DOGE that's going to be looking for more ways of efficiency. It's also changes afoot with RFK Jr. We're going to speak with Mark Bortolini about that in a minute, but how does the market kind of weigh that out?
Yeah, I think it's going to be a tough period for visibility for healthcare because, even recent comments about how much healthcare spending dominates advertising when you're not in the political cycle. And you're right, there's concerns about safety of certain vaccines and RFK being in charge of HHS. So I would just say there's clouds. There's still going to be opportunities probably in biotechs, but it's going to be challenging.
Just about the overall markets, Tom, and you think leading into Thanksgiving that slow sort of bleed, slow bleed last week in the markets, you expect that not to be lasting, and multiple factors make you feel good about the next couple of weeks. And one of them, which plays into what we've been talking about all morning, is the Treasury Secretary announcement will remove some uncertainty. You're following Polymarket to see who's in what. Bessent was at 70, but then Musk tweeted about Lutnick, and his chances went up. What is it now?
They've both fallen to sub 40%. So part of it is Kevin Warsh has moved up and Mark Rowan has moved up.
We're using Polymarket to decide who's going to be the Treasury Secretary.
Stranger things have happened, right?
So you think we hear this week? And that'll remove uncertainty, or that's not the most important thing?
Well, I think as we remove uncertainty, so it may not be announced in the next week or so, I think that's like what I'd consider a clearing event. It takes away some uncertainty, and the Trump trade, I think, is still intact.
The Fed might not cut as quickly as possible, but you still said we're in a good place, dovish-wise.
That's right. Last week, markets were a little taken by surprise when Fed Chair Powell said he might, slow things down for December. But if you look at December 2025, a year from now, the number of implied cuts is still the same. So I think he's dovish. He's just moving some of the timing. The Granny Shots ETF is really built upon the research model we used at Fundstrat. That was a thematic core stock portfolio that we had been using since 2019, so for 6 consecutive years. It takes 7 what we consider relevant market themes, and it finds the most correlated stocks to those themes, whether it's AI or millennials or Fed easing or improving PMIs. And then the stocks that appear in the most frequently across themes are our Granny Shots. And Granny Shots is named after Hall of Famer Rick Barry's way of shooting free throws.
Some of us do remember that. We definitely do. Tesla's the number one stock. The weighting is 3.25%. You want to just talk about the move in that stock this week and what it means to you in context of how you built this and where you think it can go?
Yes, Tesla has, in our research product, had been appearing since inception, since 2019, because that company has a hidden asset, which is its AI and intellectual property. And now, of course, the intellectual property built around all this infrastructure they own. So it's a company that, to us, looks undervalued because people look at it as a car maker and look at current margins and earnings. But as we know, there's a lot of new initiatives, whether it's robotaxi and robots, and now, of course, there is a political angle that you guys well discussed, and I think it can only help Tesla.
Tom, be well. We'll talk to you soon. Appreciate you. It's Tom Lee, Fundstrat.
Where Trump Trade 1.0 ran into trouble was around trade policy. And once we see what he delivers there in terms of tariffs, something he's been very, very consistent on, do you think the market is looking past that, or everything else, the deregulation, the lower corporate taxes, is going to offset any weakness on trade?
I think that if someone was trying to paint a negative picture, that's the tariffs and the trade is what's on people's minds. But of course, that's the one where we don't know what the ultimate sort of policies will be. I'm sure markets will actually provide a lot of real-time feedback, and I think that's going to help shape what the policy is. So I think in general, we should expect a pro-business environment, one that's probably equity-friendly as well.
Tom Lee concludes with optimism about the market, noting the sharp drop in the VIX reflects reduced uncertainty and increased investor confidence. He highlights the potential of FundStrat's Granny Shots ETF, focusing on stocks like Tesla that align with transformative themes such as AI and Fed policy. Lee also sees strong recovery potential in undervalued small-cap stocks, supported by favorable conditions and robust earnings. He believes strategic positioning in these areas can capitalize on long-term growth opportunities as the market continues to improve. How does the current decline in market volatility influence your investment approach? Do you find thematic ETFs like Granny Shots valuable for capturing future market trends?